Another concept. People ask me about these my entries and my exits and certain I guess pieces of my brain power that I put into trades. Take this example, and we just put this together, but you know what? This is a typical chart. This is what charts do. This is what stocks do. We see these all the time. You know, understand that this could be a period of 5 minutes. This could be a period of 2 hours. This could be a period of a week, a month, or 2 years. You know what? It really doesn't matter. This chart works for X, Y, and Z stock over any amount of period of time. Okay, what are we looking at here? We're looking at an uptrending stock. We're looking at entry points. So look at under entry points, you have item number 1 or entry point number 1. Is that your best possible entry? No. You're potentially, obviously, you're going along the stock as we keep that philosophy that you find an uptrending name, you find a strong stock, you find a strong market, you enter. Where are you going to enter? This is how you put it together, guys. Entry number 1, is that your best entry? Definitely not. Put a size next to it. How much size do you want to put in there? I put in 100 shares. Stock goes down a little bit. Buy another 200 shares. Stock goes down a little bit more. Potentially maybe even buy another 100 or 200 or even 300 shares. Now it actually gets down to the better part of the trade. A lot of the risk has come out of the trade. How do I know a lot of risk has come out of the trade? Because the stock's already pulled in X amount of cents. Maybe that, let's call that 50 cents. Stock's pulled in 50 cents. After it pulled in 20, you started getting in. After it pulled in 30, you bought a little more. After it pulled in 37, you bought a little bit more. Now it's down 42 cents from that high. Now it looks like a good entry. Now you still have weapons in your arsenal. Now you have the ability to enter your trade at the proper price with the right amount of stock. How does your position look when it starts bouncing off that level? And you know what, guys? This stock is every stock over the past 6 months of bull market that we've seen out there. So you have a full position down at the bottom, potentially 1,100 shares, 11,000 shares, 1,600 shares, 450 shares. It doesn't matter. This goes for all sizes of traders, all positions. This is how you piece into position. If you put in your full amount up at the one entry point, and you put it up there, 2 things happen. 1, you're dead because you need to punch out by the time you get down to 3. And you're not able to get the proper average price. So you need to piece in and piece out of these positions. That's how you enter a trade. That's how I do it. I love getting the most stock down at the bottom. I am always wrong. I'm always... it's a good question. Somebody has a question out there. But so for me, I'm wrong a lot. But you know what? I'm not really wrong. Because if I'm getting my best price and I'm getting most of my position down at 5, and this is where the question came in, one of the questions says, what do you do if it breaks your trend line through that 5? It's a very good point. I always keep my stops, guys. I always keep my tight stops. I'll exit. I may re-enter, but I'll exit the position. We're in a market, and this is another trick of the trade, and I'm happy that question was asked because you have the blip trade going on right now. This is probably a lesson on its own, but a blip trade is when they go through that support line or that trend line, as guys, they always do. Recently, I see it more and more. It's always going through that trend line. It's always breaking that support. It may even trade down. It may even make a half a leg or a leg and a half below that line just to end up back at where those exit points are. So I do punch out my losing positions. I do make sure I have very small losses. You guys see in my positions, you see in my P&L that I've put out there every day over the past couple months. I just analyzed it. I have about 5 losing days, and my losing days are way, way smaller than my biggest winning days, almost on a scale of about 1 to 10 loser versus winner. So once you break that line is a good question. I do punch out, but I am ready to re-enter. I am ready to get a better price, better average price, better price overall. And I will not be strayed from it, and I will continue to have small losses just to catch that full ride up off that trend line for $1.25 up until the point where it says exit points up there on the screen, as you can see right here. Piecing out, we got the same thing going on, guys. So it's getting up to that resistance level 1. You start putting out some of your stock, maybe 100 or 200 shares. Gets up to level 2, you put out another 100 or 200 shares. Level 3, you get another couple hundred shares, and you try to get out as close to that top as possible without having it turn back, which it could do very quickly. So you're selling into the buying momentum. Understand those words, guys. Once again, you think that I'm coming to you as a momentum trader, but I'm not. This is selling into momentum. Whether you're a swing trader, long-term trader, short-term trader, options trader, you have to be selling into buying momentum and buying into selling momentum, because that's where you're going to get your best prices. A lot of people are late to the party. You want to buy that breakout. You want to buy that 3 or that 5 level up there. Look out. Look out below. How do I know? Because I end up in the same place myself, and that's why I need to correct myself. That's why we need to talk about it. That's why we continue to talk about it. Okay, another question came in, very good question. What do you look for? Breakouts, levels, or order flow? As you guys know, me, myself, I look for a combination of all of those. I look for levels. I look for breakouts above certain levels. We'll get to potentially in a few other charts, even though we have about 8 minutes to talk until we get prepared for the Fed. And order flow and volume. I like to see volumes. Like I like to see that I have a in and an out. That's actually for a different lesson. We'll do this every week as people are sort of demanding it and looking for it. And I think this is great to always continue to go over. I know it looks very simple to you, and I know it's a chart that I put together. Guys, this is reality. I do it every single day in front of you. This is reality. This is nothing that we're sitting behind a desk and we don't do it. This is what we do every day. I'm just going to move on. We're running out of time a little bit.